afternoon, everybody. Welcome to the TraderMerlin Show. It is your Monday edition. I have to apologize up front. I was actually going to cancel today's show, but I said I can't keep canceling shows. And I have an appointment I have to get to in South Orange County in less than an hour. So I'm going to do probably just a shorter show today. And yeah, my apologies, but I got to get down to South Orange County. So the topic du jour, I guess, is maybe not the topic du jour, but really these politicians getting back to work. And as Liz and many other people pointed out on Friday, we'll probably see some positive action there. Markets will gap up over the weekend, and lo and behold, we had a pretty big gap up today. Let's talk about getting back to work. Are these lazy-ass politicians going to finally get to work and stop bickering? Now, I guess one of the big stories is we've had several Democrats kind of jump over and say, well, we'll vote with this bill just to get it through. Of course, concessions are being made. But bottom line is we're closer to it. Now, what will happen? Once we get this bill signed and we get this spending package all agreed upon, we'll have a clear idea as far as what tax cuts are going to be there, where money's going to go to, and how that might stimulate the economy. And I think the big story is people feel like there's going to be more tax cuts coming. So you look at the Fed watch here. I agree, Big Evan, nothing was really accomplished, not much. Right now, there's a 61% chance that December 10th meeting, we're going to see a 25 basis point cut. Now, remember, a month ago, that was 91%. So it feels like the odds are dropping a little bit, although I will say, if the bill, or if we get an agreement here and we can sign and reopen the government, most likely it's going to have a bunch of spending cuts. And my guess would be that this would cause them to potentially lower rates to stimulate things a little bit more. So I'm kind of in the camp of seeing that third rate cut here in December. I didn't think that they should. Of course, I didn't think that they should just shut down either. I think they should actually be working, getting something done. But yeah, not a lot of getting done there. So right now, 61.9% chance that we're going to get a rate cut in December. I do think, my guess would be this week we will see it resolved, and the markets will rejoice for that. And the reason why is it's just uncertainty, right? We don't have any of the data to look at, which we've talked about. Data is so critical for us to make our trading and investment decisions, but we're just traders. These guys need to make policy decisions and understand where markets are going to be going. So I think the data is extremely important. If you look at this, I thought this was kind of funny. This is not to be political or anything. I just was looking for a government shutdown clock, and I had to laugh when I saw this because this is, I guess, put out by the whitehouse.gov. It's mocking the Democrats. Democrats have shut down the government. Well, you're both doing it. But anyway, you could have spent a little bit more money and got a clearer font. Like, you specifically picked a blurry font for your website. Like, 40 days. 40 days. These guys have been in disagreement. 40 days they should not be getting paid for. So I'm kind of happy to see that. I think that once we get the government back open, we'll get a lot more volatility over the next week or two, so expect that. I've been super busy today, so I did not make any trades today. Unfortunately, there was some good moves too, and I was so preoccupied with other things, I decided to just kind of forego it. Let's dive into the second part here, which was a comment that came from Scott, and I like this one. He says, yay, more stimulus checks. Well, hold your horses here, because yes, Trump this weekend did blurt out on his social media that we're all going to get $2,000 checks now, or at minimum $2,000 checks. Now, slow your roll here, because what's probably going to happen, if you listen to Scott Besson's commentary, he's saying, no, that's not going to happen, right? We're not going to do that. We have to wait till the government opens. And I think, well, personally, I don't think we should be getting any stimulus checks. I think that money should go back to paying down our debt, right? Take those billions of dollars and pay down some of our debt and at least have that first step. To me, this is just buying votes for a specific party by, oh, look, we'll give you all this money back, but how about we just go and pay down our debt that we've been accruing, because this should be going to that. The other part with all this is, what does that do? Let's say hypothetically, and I think, who sent that question? Scott. He says, yay, more stimulus checks. What did it do last time? It actually helped out one category in specific. Crypto did rather well when those stimulus checks came out. Now, I don't know if that was a direct result of that, but remember when they handed out that first $1,500 stimulus check, even Walmart was running ads that said, hey, we've got this new 75-inch TV. It's $1,500, right? Just the amount of your stimulus check. Just sign it on over to us. So I thought that was kind of interesting back then. It wouldn't surprise me to see that happen again this time. And what do you ultimately expect to get out of this? The smart people, right? The educated ones who are financially savvy are going to take that money and they're going to either pay down their debt or invest it. The uneducated people who are part of the problem for the economy is they're just going to go and spend it, right? They're not going to pay down their debt. They're going to just go ahead and spend that immediately. Now, the problem is that typically the people who are financially savvy are making more than $75,000 per year. And the last time we got these stimulus checks, if you made more than, I think it was $75,000 as an individual or $150,000 as a married couple, you didn't get the stimulus check. So most of us probably will not get that stimulus check, but even if it was $2,000, I've also been reading that it's not going to be a check that comes to you. It'll be like it's just a tax deduction piece that you can take off your taxes, which is actually probably a better thing. There's got to be a better way to invest it. I would agree. You know, there's no reason to give everyone a stimulus check, right? The economy's doing great. During the shutdown, it kind of made sense because a lot of people were out of work. You know, we're going to the unemployment office, and those checks were pretty small. So that kind of made sense. This, to me, is just grandstanding and just, Mickey says 8 balls and beers. Yeah. Some people will certainly be spending on that. That's for sure. You know, but you really shouldn't be giving that money back. I think it should go to paying down the debt. In this case, you won't get a check. It'll just make your taxes less, which I think that's probably a better way of doing it. At least that's what Scott Besson has stated in his interviews, early commentary. So what does this mean for other market segments? As I'm going to reiterate for everybody here, I have to do a very short show today because I got to get on the road like now to make it to South County in time to make this appointment. Remember, if we get this data, if we get lower taxes, most likely what will end up happening is because of the uncertainty that's being placed on the market, the Fed will most likely cut rates again in December. Cutting rates ultimately makes the dollar weaker. Making the weaker dollar helps with gold. And as we saw today, gold had a pretty nice day. Of course, most of the market had a pretty nice day today, but I will look at the Victor here, up 2.83%. We have gold. Let's have dinner, Big Ed. Let's do it. I'm not going that far south. I'm going to Lake Forest. I'm not going that far south, my friend. That's way down there. But where did we go? We went San Clemente, right? Like, that was pretty deep. Anyway, look at gold's chart today. This is a really good chart because we left that line on there at 4,034. Remember that point for that 4,034, I believe we had talked about that being the point for a retest, which it's retested there, and then also on the breakout, for a breakout potential to the upside here. Gold and silver being benefiting from a talk of potential rate cuts happening as stimulus checks as well. So that was your number one performer, 2.82%. NASDAQ soaring today. This is one where I already forgot the guy's name, but you know, Mr. Burry, who made that massive short position. This guy lost so much money today. Look at Palantir, which is 60% of his portfolio, PLTR, up 8.8% today and going up more in the after hours. So he was probably super stoked because it dropped 16%, but then all of a sudden spiked significantly today and erasing a lot of his gains. Unless he dumped his position, which wouldn't surprise me that he would dump his position or get out of some of it. Now, also he had NVIDIA in his portfolio. So there's NVIDIA, which rallied very nicely, right? The big gap up, as we kind of were anticipating there being a nice gap up today. And a lot of these stocks were ripping. My favorite one is a chart we talked about near the end of the show on Friday, which was Microsoft. Right, Microsoft was just down into this area of demand, bottoming out around 492. Top of that demand zone was 499, and basically just bounced right in between it. And today, gapped up and just ran all day long. 1.85%. Now, it's still not out of the woods, right? It's a pretty ugly chart, just been a giant double top and not much going on. But great point to buy it would have been on Friday because of that demand zone. Got a nice rally out of it today, and we'll see if this rally continues. But there's other pieces here. Liz says, wouldn't surprise me if Burry dumped his position. Yeah, I think so too. I would agree with that. I'm pretty sure he did. All right. And he says, those bankers took your advice. Nobody takes my advice. Don't take my advice. Do your own analysis. Do not take my advice on anything. Big M says, I closed all my QQQ calls on Friday. Well, it's okay. We talked about that. We're like, it's all right. You made money. So leave it alone. It's okay. Yeah, well, at least you got positions open today, man. I just didn't have anything open today. So, I mean, I have a position in IBIT, which was okay, but nothing really great. We'll see. Did he say that he dumped it, Oliver? I'm not sure if he actually dumped it, but it wouldn't surprise me. I mean, when you have a stock that drops this much, let's go back to Palantir, and you have over $1 billion short of it, and it drops 18.6% in 4 days, I'm closing my position. Hell yeah. Locking in some of that profit right away. Probably because that was a big leverage position as well. All right, so that was, we're working our way down the ladder. Normally I go up the ladder, but NASDAQ was number 2. Nice to see Bitcoin a little bit of a bounce. That kind of resonating here, if you will, right at that $100,000 mark, kind of made me nervous. So it was good to see Bitcoin have a bit of a rally. 106,365. There were a lot of other cryptos that really soared today. I'll just show you some of the top ones here. Hedera's up 8%, Ripple's up 6%, Algorand up 6%. I mean, there were some big movers in that crypto. Not double digits like we've been seeing over the past week or so, but still nice pop to the upside. We're not out of the woods yet. For you Bitcoin fans, as I am, I'm still holding, but you have a nice bounce here, but what we're seeing is lower highs and lower lows going all the way back into early October. So I'm not feeling that great about this yet, right? For me, to really change my tune and all of a sudden become like, okay, we've passed it. We got to get above 116.5. And that's that last big pivot. So hopefully we'll get a nice big rally here and continue to move to the upside. And bam, Bob's your uncle. There you go. Let's see what he's got. Burry's last quarter. Burry was in the last quarter. If he's still short... Yeah, that's right. And Steve, that was the interesting point I tried to make last week was the announcement, the big hype around Burry's position was last week. But as of the end of September, he'd already had that short position. So he was certainly underwater if we look at Palantir again. If you look at the end of September, I'll put a vertical line. Well, it already did. Right? So everything to the left of this vertical line is potentially where he built his short position. So if he did, he's still underwater. As of today, if he's still holding it, he's underwater. Right? He might have been in profit on Friday's session, but he's underwater right now. And I don't know. That's why you don't follow these guys. I really just do not. I just don't follow Ackman or Burry or any of them. They're going to tell you later after the fact what they've done to help themselves, not help you. S&P 1.53%. We had a beautiful hammer pattern on Friday's session. We talked about that on a couple of different of the broad market indexes. My guess is, based at the rate we're going, we'll see challenging all-time highs here within the next couple days. And let me move this around to get it to the all-time high. Bam. It should be, there we go. So that's your all-time high there on the S&P futures. That's going to be 6,953. The way this moved today, could easily see that be hit tomorrow, maybe even the next day. So S&P looking great at 1.53. Russell was up only 0.97%, so a little bit of a pop, but still great hammer formation. It wouldn't have worked for me from a trading perspective because you guys know my rules. It has to open below the high of Friday's candle and then break above it. It did not. But if you notice on the S&P, similar picture. 10-year, meh, nothing to speak of here, right? Just a lot of chop. I think over the next couple weeks of the government shutdown, we'll start to see some more clarity on what that 10-year bond is going to do. But right now, it just feels like it's still in that overall downtrend as it has not broken a pivot high. Crude oil, 0.64%, but the trend is your friend till the bend at the end. It's still drifting lower, even though it was an up day of 0.64%. Did not look that great. And then finally, your dollar index, which is pretty much unchanged on the day. That's actually a bullish sign because we're in an uptrend. It had sold off, and now you have some hesitation, so that's bullish. So I've got conflicting signs here from a technical perspective. I've got bullish signs for the market, and I got bullish signs for the dollar, which are typically inverse. So take that for what it's worth. Obviously, if you're trading the S&P, that's the most important part because that's what you are trading. And that's our markets. Boom. Let's go to this question from Trinity. It says, what's your take on the 50-year mortgage proposal from Trump? Well, I had to laugh at this one. This goes back to not understanding finance. Now, if I saw a mortgage rate, well, let me rephrase. Let me start all over again. I'm not opposed to a 50-year mortgage. I'm not. It has to be under the right circumstances. And my first question would be, what is the rate, right? What am I paying? Is it a 7% mortgage? And I apologize, you're an idiot for paying a 7% mortgage for 50 years. Now, if I got, let's say, a 2% mortgage, I would take that for 50 years, for sure. Because over the course of time, the average rate of return for savings accounts or bonds is much higher than 2%. So, yes, a 2% mortgage I would do, maybe even a 3%, but I would never do like a 5, 6, 7% mortgage for 50 years. You're paying so much money. Steve says, how is that making houses cheaper? It's making them cheaper from one perspective, and that is if you get in a 50-year fixed rate mortgage, the payments are going to be less. Obviously, you're paying way more interest up front. Like your first few payments are just like 99% interest. So you're paying way more interest up front. Therefore, your payments will be cheaper because you're not paying down a lot of principal. So when you go to shorter term, and I don't have the numbers off my head, I'm sure someone would, I don't even want to say them because I'm sure someone will call me out on it. But let's say your mortgage on a 50 year is something like, make it up, like $2,000 a month. Well, maybe going to a 30 year makes it $1,500 a month. Well, that's $500 a month less. And if you go to a 15, actually, no, I'm sorry, it's the other way around. If I go to a 50-year mortgage, and I had it backwards. Sorry, my bad. 50-year is going to be, let's say, $2,000 a month. The 30-year is probably going to be $2,500 a month, and the 15-year is probably going to be like $3,200 a month, right? So it's better for you to get that shorter term mortgage and pay it off earlier rather than later. So I'm not a fan of the 50-year mortgage. I think it's silly. I think what it does is it does allow people to buy homes because it's easier to qualify for something when you're making your payments over 50 years. You don't have to have as much income. So could it theoretically impact the housing market in a positive way? Yes, but what it's going to do is it's going to cripple a lot of those people who are locking in a 6 or 7% mortgage for 50 years. I mean, that's a long time to be paying that kind of interest. The interest payments not double, but they go up significantly as far as how much interest you would pay over time. Now, I haven't had a chance to build out any spreadsheets or anything, but I could, if you guys are interested, build out an amortization table just to make it clear and show maybe a 15, a 30, and a 50, what that might look like at varying rates. Now, keep in mind, if you're locking in a 50, you're going to have to pay a higher rate anyway. And if you went with a 30-year, it'll be a little bit less. And you go with a 15, you pay much less. When I locked in mine a while back and I got, sub 3 on a 15-year. Okay, great. I'm going to pay my mortgage off much faster. I'm going to pay it off at a lower rate. Great. The longer time commitment, you're going to have to pay higher yield. So I think that this is kind of a bad thing for the average investor. I personally would not recommend it to anyone unless you're at like a 1% mortgage for 50 years, but there's no way you're going to get that. It's just not going to happen. The longer the amortization period, the lower the monthly payment, but the higher amount of interest you will pay. Correct. Right. And that amortization table, I could draw it out and show you the 50, the 30, and the 15. Yeah, you're paying so much more in interest on a 50 year. With the 15, I'm paying a lot more of the principal on each check or each payment. So much better. So Trinity, I'm not a fan. I think it's another ploy, not a ploy, but I think it's another gimmick to win favoritism. As someone who's a homeowner, I do think that it's a good thing because it'll drive home prices up. It'll have more people who couldn't afford a 30-year, right? Because you couldn't make those payments. But now at a 50-year, they'll probably be able to make those payments. And now you have more people coming in the housing market. But I think it creates more of a problem than it does something good. Do the 50-year loans have a minimum amount of time you must keep the loan? Like a prepayment penalty? Not sure, Les. I don't know. It's all a proposal. I don't think they're not released, right? I don't think it's going to happen. We'll see. Easy way to get people to pay more interest, not knowing what they're doing. Correct, Sweeney. Absolutely. And this is where education is so important, not just, in trading and investing, but in everyday finance and numbers like that. The best time for 50-year mortgage would be with a massively inverted yield curve. Yes, totally agree. Buy more houses and make renters pay the mortgage. Yeah, I'm with you on that one too, Rob. Absolutely. Let's go look at your economic calendar for Tuesday. We don't have really anything exciting happening here. And again, I have to apologize, everybody. I'm going to bail here in 2 minutes just because I got to get on the road and get to South County by 3 o'clock. So a short show. I didn't cancel it. I kept it up. We got Veterans Day tomorrow. So I'm hoping you all do something nice for a veteran. If you see them around, you know veterans, thank them for all that they've sacrificed for this country. A lot of them are struggling too. PTSD and just saying, I remember when my stepfather came back from Vietnam, he said that he was like spit on by people and just disrespected by the people. I was like, man, these guys don't want to go, in many cases, do what they do. They're being told by the government what to do. So you have to take your hat off to all military members, all 6 branches of the military, right? Everybody, all 6 branches of the military? What do we got? Army, Navy, Air Force, Marines. You guys know the last 2? The last 2 are the toughest. Most people don't know the other ones. Yeah, absolutely. Thank you to all the veterans here, man. Thank you for all that you've done, man. I was too chicken to join the military. Coast Guard's number 5. What's number 6? Dun, 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 dun. Thank you, President Trump. He created this one in 2016. Space Force. Yeah, Coast Guard. Coast Guard's a real deal, man. People think that Coast Guard's just a cakewalk. No, the Coast Guard, that's some brutal stuff out there. You may not seem like, you're Fallujah or something, but the Coast Guard got to deal with some crazy stuff. Anyway, to all 6 branches of the military, thank you so much. I will be doing a show tomorrow, just you guys know. I'm going to do a show tomorrow. Hopefully we'll make up for it. So nothing really on that economic calendar front. You can see we have NFIB Small Business Index. If you're trading small caps, you do have claimant count change coming out for the British pound. And then on the earnings calendar thing for tomorrow, there are some companies, but nothing super big. You've got C Limited, Infineon Technologies, you got Bayer, and that's pretty much it. All right. I thought National Guard was not another branch. Maybe I'm wrong. Maybe there's 7, Rob? Anyway, that's going to do it for me, everybody. I have to run. I apologize for the short show, but I didn't want to cancel on you today. I want to make sure we got that show in there. So tomorrow, I'll do a full show like normal. If you guys have questions, email me at TraderMerlin@gmail.com. Things you want to discuss on tomorrow's show. Love to hear it. There's tons of stuff to talk about. We could talk about Taiwan Semiconductor. Sales falling. If AI is really rocking, why do we have sales falling? All right, we'll talk about that one tomorrow. Thanks so much, guys. Apologize for the short show, but I got to run. Have a great one. I'll see y'all tomorrow.